Mainstream media tends to have an obsession with two barometers to tell us what's happening with what they call Australian property markets: median price changes and auction outcomes. The problem is that they're pretty much talking about Melbourne and Sydney exclusively when they talk about auction clearance rates and changes to median prices, and they use that as the yardstick for what's happening with what they call the Australian property market. And as many of you will probably be aware, that's extremely misleading and enormously unhelpful for the great majority of consumers, because the majority of Australians actually don't live in Sydney and Melbourne. The majority of Australians live in other parts of the country, and would probably find it useful to know what's going on in their property markets. So it's not all about median prices and auction clearance rates in the two biggest cities. There are other barometers that are a lot more useful in helping real estate consumers, because the one thing that most consumers of real estate, particularly property investors, want to know more than any other thing is which areas are going to rise in price. And they want to know that before they actually rise in price. So when media publishes data about changes recently in median prices in the major cities, what they're telling us, in fact, is where you should have bought 12 months ago, and that's not particularly useful to anybody. And when they talk about auction clearance rates in Sydney and Melbourne, it's not really telling anything about where in those cities you should buy, and it's not telling anything useful about all those other locations around the country. So at Hotspotting, we tend to focus on other barometers, the ones that actually give us a clue to where prices are going to rise before they do. Sales volumes is a big one. That's the yardstick. That's the primary barometer that we use in producing the quarterly editions of the Price Predictor Index. We recently published our spring edition, and we look at every town and suburb in the country and look at what the pattern is for sales volumes, because if sales activity is rising steadily quarter by quarter, the chances are prices are going to follow suit and rise also. And it works in the other way, in reverse as well. When sales activity is falling away quite markedly, that's when prices stop rising, or in some cases prices actually fall. Another useful barometer is what's happening in the rental market, what's happening with vacancy rates, what's happening with rentals. Now, there's plenty of research evidence supporting the argument that before prices rise strongly in a market, we're going to see action in the rental market. We're going to see vacancies fall, rentals rise, and eventually prices. We saw that in Sydney. Before Sydney got on its growth path in about 2013, we had a couple of years in which rents rose strongly, but prices didn't. And for people who understand how markets work, that was a signal to advise themselves, their clients, that that was a good time to be thinking about getting into the Sydney market before prices rose. And we know what happened after that. Hobart's another example. Hobart's had a very tight rental market for a long time, the lowest vacancies in capital city Australia for years, and out of that arose a strong property market, and for the last couple of years it's been the strongest capital city in terms of percentage growth in house prices. So I note that another very good researcher out there in the property market, Simon Presley from Propertyology, went public with some information about a week ago talking about the usefulness of looking at vacancy rates and what's happening with the rental market and locations to get a clue which markets are going to be the growth markets for the near future in terms of prices. And I tend to very much agree with Simon Presley on that point. So I've been thinking about what he said and the fact that we at Hotspotting, when we're rating areas and recommending them to our customers as good places to buy, we also are very cognizant of and take a lot of notice what's happening with vacancy rates and what's happening with rentals. And because quite often the first clue that a market's improving and is going to become a growth market is that there's a drop in vacancies and a rise in rentals, and then prices react later. There's lots of examples that are around the country. Regional Queensland's a very good example. Lots of markets where vacancies rose, prices fell when the resources investment boom evaporated, are now on the way back. Mackay's an example. Vacancies were very high there, 4 or 5 or 6% at one point a few years ago, but now, after dropping steadily in recent years, they're now down to 1.5%. We're seeing rents rise and then prices have followed suit. But the market that fits all of these parameters that I'm discussing tonight, the barometers that include vacancy rates and rental in a market, as well as other factors that I'm going to talk about, is the Moreland local government area in Melbourne. It's one of the markets in metropolitan Melbourne that we rate very highly at the moment. It has scrubbed up very strongly in our spring edition of the Price Predictor Index that I mentioned earlier, where we look at sales volumes, and we're looking for suburbs where sales activity is rising, and Moreland has multiple suburbs where that's the case, and it's Melbourne hasn't had many of those recently because the market's been trending down post-boom. We all know it's now mounting some kind of a recovery, but until very recently, most suburbs of Melbourne had downward trends in their sales activity, but a number of suburbs in the Moreland local government area have actually had rising markets, and many others are what we call plateau markets, where sales activity has sort of evened out below the previous peak. So it stood out for us in that recent spring edition of the Price Predictor Index as one of the strongest markets in metropolitan Melbourne, and one that's well placed to show good growth moving forward now that recovery is underway. Now, the Moreland local government area, it's north of the Melbourne CBD. We're talking about suburbs like Coburg and Brunswick, Pascoe Vale, up to suburbs like Glenroy. It's an area that's got what I call good bones in terms of its real estate market. It's got all the sort of basic things that investors might look for as a good place to buy an area that might show good, sustainable, long-term growth. And it's done so in the recent past, and we expect it to do pretty well in the future. I mean, it's got great transport links. It's well serviced by 2 metro train lines, easily accessed by CityLink. It's close to the major airports of Melbourne. It's got major employment hubs, particularly its proximity to the education and medical employment hub in the Parkville, Carlton area, where there's a number of hospitals and a couple of major universities. And being close to that is a huge factor in the market area. It just brings a lot of demand into suburbs like Brunswick, for example. And because of all that, the suburbs of Moreland, generally speaking, have shown a high level of resilience in the face of the post-boom downturn that Melbourne had until it recently started to recover. This year has got the Melbourne Biomedical Precinct. It's made up of over 40 hospitals, medical research facilities, biotechnology organisations and universities. Really important factor to have something like this in the midst of your property market or close to it, because it just generates so much demand for rentals and also for buyers. The precinct employs tens of thousands of people, including 10,000 researchers, etc., etc. The University of Melbourne has 43,000 students, 3,700 staff, and even bigger numbers for the nearby RMIT University. And you've also got the Royal Melbourne Hospital, which is affiliated with the University of Melbourne School of Medicine, which is the biggest hospital in the region. So that's a big factor in the market. And it's generating a pretty solid property market. Now, I started out by talking about barometers of property markets, indicators of future price growth to look for, and vacancy rates being very low is one of those. Now, if you look at the vacancy rates throughout the various postcodes in the Moreland local government area, we find that virtually all of them are well under 2% with their vacancy rates. In fact, all but one of them is somewhere between 1.2% to 1.7%. That means that right throughout the precinct, very, very low. Part, at least, by that education and medical hub nearby. The Brunswick postcode 1.7%, the Brunswick West postcode vacancy rate 1.2%, and others similarly low. So rentals are strong. Rental yields, particularly for units, are sort of somewhere between 4 and 4.5% is common, which is pretty good by Melbourne standards. Has a reasonably good level of affordability. It's one reason why this area is popular and has high turnover of properties. A number of suburbs have median prices for houses in the 600,000, 700,000s, relative to its proximity to the CBD. That's quite affordable. You're paying more in suburbs like Brunswick, Brunswick East, Brunswick West, Coburg. But in those areas, apartments are very popular. So Brunswick, the median price for apartments is a bit over 500,000, is almost exactly 500,000 for Coburg, and it's 435,000 for Brunswick West. So very affordable apartment markets, so close to the CBD and the education medical hub that I described earlier. And it stands out to me that while, like most locations in Melbourne, median prices for houses in this precinct have dropped in the last 12 months. That's been a citywide trend. Median prices for apartments in many of these suburbs have actually increased. So they've been very, very defiant of that downturn that was in place in Melbourne, generally speaking, until very recently. So it's another reason why I think this area's got very good bones. Strong demand for apartments, both for buyers and rentals, and it's kept prices up during the recent downturn. Lots going on in that area. A number of government-sponsored activity centres, the Brunswick Activity Plan, the Coburg Activity Centre, Glenroy Activity Centre. There's new infrastructure, new train stations under construction, suburbs like Coburg and Moreland as part of that broader citywide ongoing project to remove level crossings to avoid that conflict between cars and trains across metropolitan Melbourne. Lots of new unit projects underway or in planning. Very vibrant precinct. I think would be a great place to live. Certainly attracts a lot of demand from renters and buyers, and that's why vacancies are so low, and that's one reason why prices, particularly for apartments, have been so resilient against the recent downturn. And I think that this is a market that's going to show really good growth going forward. So it's the Moreland local government area, including suburbs like Brunswick and Coburg, a little bit north of the Melbourne CBD. So that's my hotspot of the week for this week. Tune in roughly the same time next week. It's always on a Tuesday evening when I'm in the country. I've been missing for a couple of weeks, but back on deck as of this week. So the usual transmission resumes every Tuesday evening around about this time. I'll be talking about my hotspot of the week, and this week it's been the Moreland local government area of Melbourne, a suburb area with great bones for real estate. That's it for now. Let's talk again soon.